What if I told you that after watching this video, you will enter the trading matrix? You will be able to predict with 110% hit ratio the daily candles. Not actually, guys. We are going to pass on that now. You know, I don't believe in unicorns for now. But I'm going to give you an intraday trading model so you are able to capture the range expansion of the daily candles. Not every instrument is going to be expanding every day, so I'm going to give you some specific keys on how to select the ones that are about to expand and how to capture those tasty pips. First, guys, I want to start off by saying, look how beautiful this chart is. I spent an hour looking for this color combination. Let me know in the comments if you like it. And I want to also remind you, if you haven't watched my community tab, that I created a new YouTube channel where I'm posting daily a 1-minute series teaching you how to trade. That YouTube channel is called Smart Money Shorts. And I also opened a TikTok account where I'm posting the same videos at Smart Money Source. Make sure to follow and hit the like button. I want to give you guys this model in order to capture the daily expansion. As you can see on any chart, price is not always expanding on the daily candles. Sometimes it is consolidating and other times it is expanding. So we are going to focus on this candle. So the first thing we need to understand is to identify the potential next expansion. How we do this? Well, every time price is in a consolidation, we will have to wait for this consolidation to be broken. Obviously, this break of market structure has to be aligned with the overall direction. In case you don't know how to get the directional bias, I recommend you to check this video of mine where I explain exactly how to do it. So what I like doing is having a list of pairs where I'm going to look for potential breaks of consolidation. In this case, if we look at EURUSD, we can see our price has been expanding to a downside. We have 1, 2, 3 candle, 4 candles actually going lower. In case you don't remember, when price is expanding, it tends to respect the daily highs when it's expanding to a downside. For example, in this case, we have 1, 2, 3, 4 candles and even 5 candles going lower, and all of them are respecting the previous day high because my money is distributing, accumulating short and expanding lower, accumulating short and expanding going lower. But in this case, as we can see, the expansion is already over and now price seems to be consolidating. What we want to see is price closing one more time below the consolidation. So what you can do is set an alarm here on TradingView. In case you don't know how to set an alarm, right click, add alarm on horizontal raise. So when price is crossing this level, you have to wait for the full candle to close. So we know that price is likely going to expand one more time. But going through different pairs, we can grab any random pair. For example, GBP, CHF, apparently is expanding to a downside. We are on a bearish trend, and as you can see, the last 2 candles were bearish and they were respecting the previous candle's highs. In this case, what you can do, and we jump into the step number 2, we wait for the next daily open to hunt for a clear setup. So what we do is we mark this level, the daily open, the next daily open, and we jump into lower time frames. What is the idea of the lower time frames? What we want to look for here? Obviously, we want to look for, in this case, a distribution. This distribution, once it's completed, it will probably bounce off a point of interest. So ideally, we want to select which level price is likely going to hold. If you don't know which levels are going to hold, I recommend you to check this video since I explain you a clear system for you to identify the higher time frame bias. But for now, just judging at this price action, I can already see that this is an order block that grabbed liquidity, and this order block was recently broken to a downside. That means that price now is likely going to mitigate this order block and continue going lower, creating another expansion to the downside. So the bias for the next day is for price to come back into these levels, the point of interest, and continue going lower. So how are we going to confirm this trade? Obviously, with a break of market structure. It's the same concept, but on a lower time frame. The good thing about lower time frames is that the cycle of breaking the consolidation happens quicker. So the next day, we're going to wait for distribution with a break of market structure or a normal break of market structure like this one. Once we have the confirmation, you will enter at the test or however you want to enter. You can find this on my videos. I won't explain how to enter now. But the idea is that we are going to select a point of interest based on the previous daily candle and the most recent price action, and this usually happens between 10 p.m. to 3 a.m. New York time. As an example, the last day on this pair, GBP-CHF, which was an expansion day, if we go back to a daily, you can see that this day open, price went a little bit higher and then expanded to the downside. Look what happened. As soon as the day opened, exactly at this level right here, we had a redistribution here on a lower time frame, the 5-minute chart. If you don't know what redistribution is, you can learn Wyckoff on my channel or look on Google. There is a lot of free material. In simple terms, we had a lower low followed by a lower high and then another break or market structure. This break or market structure is indicating that the 5-minute chart in this case is aligned with our daily bias of expanding to the downside. So as soon as this happened, you could have taken a short here with a stop loss right there. Of course, there are many ways of refining this, but assuming that you did it like that, you had a nice run to the downside. Or if you decide to take a short based on this order book, obviously the RR is way better. And if you decide to go and enter in a much lower time frame, if we jump into the 1-minute chart, probably when price was retracing and smart money was accumulating from a premium level, basically a more expensive price, here, as you can see, we have another distribution that was broken down here. So you could have taken this trade right there, aligned one more time with the daily candle. So obviously, the lower the time frame, the better the risk to reward ratio, but that's totally up to you if you want to enter off of a scalp or an intraday setup. Basically a 5-minute chart, a 50-minute chart, or a 1-minute or seconds chart. Here we have another example, in this case on the previous day to the last expansion that happened down here on this daily candle. In this particular candle, you will see a price in this particular scenario didn't break the consolidation first, so we wouldn't know that price was going to expand unless obviously you know Wyckoff. If we jump into the lower time frames, you will see that as soon as the daily candle opened, we are coming from a move that grabbed liquidity on the buy side to the left, basically a daily high where we know it's a pool of liquidity for buy stops, and after grabbing that liquidity, the day ended up right here. When the next day opens, knowing beforehand that this is an order block that needs to be mitigated, price comes back into the order block, creates another distribution and another break or market structure confirming the direction. So once this happened, if you were anticipating an expansion for this day, you could have gotten this trade with a stop loss up here and you managed to capture the entire range expansion. Looking at the same chart, let's say that we saw this consolidation getting broken right here on this candle. And on this candle, where we already know that price is likely going to expand, we want to enter a trade. One more time, we jump into a lower time frames. When we have the daily open, we have the manipulation, the distribution, one more time. Break or market structure, in this case, this distribution was broken apparently down here. Break or market structure. And after the break or market structure, you have a tiny little test of this order block and then continuation lower. So even if you didn't want to refine your stop loss, this entry was good enough to make a lot of money. Why? Because we are catching the entirety of a daily range expansion. I hope you enjoyed this video, guys. If you have any question, let me know in the comments and don't forget to like and subscribe for more.